there is going to be moral hazard. I mean, why bother responsibly managing your interest rate as a bank now if the Fed's got your back? You get all of the upside and none of the downside, because the Fed will just, sort of make you whole and provide you liquidity until things go back your way again. And as far as Secretary Yellen's claim that taxpayers aren't going to pay for this bailout, that's total nonsense, because the bailout of the depositors is going to be paid for by higher FDIC fees, and higher FDIC insurance fees are going to be paid for by everyone.
The endeavor to control the fallout from the failure of the Silicon Valley Bank, according to Stephen Moran, a co-founder of Amberwave Partners and a former Treasury official, is a grave oversight that will ultimately cost the markets and American citizens a lot of money. A really informative conversation about the current bank bailout and its effects on the economy and investors was had by Moran on Monday with Blockwork Macro's Jack Farley and Joseph Wang, a former senior trader at the New York Federal Reserve. In addition to announcing the closure of another bank, Signature Bank, federal regulators also released a plan on Sunday to manage the fallout from the collapse of SVB. The Federal Deposit Insurance Corporation, FDIC, of the United States declared that as the federal government fought to prevent further financial system catastrophes, it would guarantee that all depositors at both banks would receive full repayment of their deposits. The Federal Reserve and the Treasury Department's backing for the systemic risk exception allowed depositors to access their funds starting on Monday, according to a statement from the FDIC. Please take a moment to like this video, subscribe to the channel, and enable post alerts for future videos like this before we hear Wang and Miran's debate. Don't forget to add your thoughts on the cooperative rescue of the banking industry in the space below. For us to be able to keep bringing you great videos, everything you do helps with the YouTube algorithm. Thank you and have fun watching.
This thing happened so incredibly quickly. It came up on for sure me, and I think almost the entirety of the market with shocking speed. And I think that's part of the, this new digital age where people communicate and coordinate on getting their money out of a bank much faster than they used to. It was shockingly fast. On Friday, the scope of the problem was very unclear. Over the weekend, you heard more and more people, everyone I talked to with, sort of a small business account at a regional bank said, yeah, I'm pulling my money first thing on Monday morning. And it became increasingly clear that deposits were going to flow out of those regional banks. And so as the hours ticked by on the weekend through Friday night, through Saturday, nothing significant from the authorities, I think, I was growing increasingly concerned. And then on Sunday morning, they send out Secretary Yellen onto the morning shows. And I thought, okay, she's not going to go onto the morning shows empty-handed, and that's exactly what she did. And I thought, oh, this is a disaster. They sent her out with nothing. It's going to be murder on Monday. And fortunately, they did get something out by Sunday evening. They announced a pretty fulsome set of packages to try and prevent further bank failures. So it absolutely was a bailout. It was a bailout of the VC community. It was a bailout of the depositors who should have taken more, who should have done, I think, a lot more due diligence and responsibly manage their treasury accounts. And so we did, there's a cost and there's a benefit. The benefit is we've cut off the left tail of huge runs on a large number of regional banks, not all of them, as I'm sure we'll get into when we talk about CRE risk, right? But of a large number of them. But on the flip side, there's lots of moral hazard and lots of irresponsible activity was bailed out. And I think that there probably were better solutions that were somewhere in between and theoretically we could have gone down that road instead.
Joseph, is this moral hazard? Was this a bailout?
100% bailout and an unprecedented bailout, really. We never want, mom and pop to lose their money when they put money in a bank. So the way that the government does this is that they give everyone a $250,000 FDIC insured account. So they protect basically the average person. Silicon Valley Bank was very uncommon in that almost all of its deposits were uninsured. So it wasn't a bank for mom and pop. It was a bank for rich people and for companies, people who should have known better how to manage their money. Now, I used to work in the money markets, and I can tell you that anyone who is just mildly competent in managing corporate money knows that banks can fail. And so you want to put some in money market accounts, you want to buy some bills and so forth. So all these guys basically, just bet it all on Silicon Valley Bank. That was their choice, and the government basically bent the rules to protect them. Now, I'm pretty certain that if we had a small bank somewhere in Oklahoma fail, I'm sure the government would not be making those depositors whole if they were uninsured. The facility that we're talking about now is an emergency lending facility that the Fed has. And what the facility does is something that a central bank has, to my knowledge, never done before, because it's completely crazy. So if you're a central banker, you understand basically what the Fed is offering is basically to bail out the entire banking industry. And that's unfortunate, because over the past 10 years, we've done so much to improve the banking sector, so much regulation, so much the Fed has put a lot of liquidity in the banking sector that we could have shown the world that the banking sector was stronger. But now we've shown that we really don't need bank reps. We just need the Fed to fire up the printer.
This consolidation is really, I think, critical to the conversation about moral hazard and whether or not this was whether or not this bailout was a good thing. I think, look, there is going to be, there is going to be moral hazard. I mean, why bother responsibly managing your interest rate as a bank now if the Fed's got your back? You get all of the upside and none of the downside, because the Fed will just, sort of make you whole and provide you liquidity until things go back back your way again. So we really are removing incentives for banks to responsibly manage their balance sheets. And as far as Secretary Yellen's claim that taxpayers aren't going to pay for this bailout, that's total nonsense, because the bailout of the depositors is going to be paid for by higher FDIC fees, and higher FDIC insurance fees are going to be paid for by everyone. So it is going to be paid for the taxpayers, just not as a direct levy on your taxes when you file them. It's just going to be paid through higher costs in the financial system and what that means for the economy. One of the biggest issues, I think, with moral hazard and this bailout is the encouragement for corporations now also to not do any due diligence and not be responsible in their treasury management. There's all sorts of ways that any responsible corporate treasurer would have been able to lower his or her company's exposure to Silicon Valley, and they didn't, because there was this rather incestuous VC ecosystem. I've read that Silicon Valley was an LP in many VC funds, meaning they invested in the VC funds. The VCs owned startups, portfolio companies, and then those portfolio companies were instructed by the VCs to do their banking at Silicon Valley, right? And so it was basically moving dollars from the left pocket to the right pocket, and that to me is a bailout form of moral hazard that does make me uncomfortable. The preferable solution, rather than doing a bailout, rather than encouraging this type of moral hazard, would have been just to sell Silicon Valley to a willing buyer, have the willing buyer make the depositors whole or almost entirely whole. And that's a solution from the private sector. That's not a bailout. That's a bank that wants Silicon Valley's assets. For example, maybe they want maybe a major Wall Street bank wants the relationships with startups because that feeds the pre-IPO pipeline. Right? Like you can see any of these, sort of top Wall Street banks paying a premium to have all these banking, ordinary boring banking features, deposits, checking accounts with tech startups, because then they've got their relationship with the tech startup. The tech startup does the IPO, they're first in line. Right? And so it's worth paying for that in order to increase the likelihood that you're making profit in the future, right? The problem, and then, this is a solution for the private sector. The government taxpayer doesn't have to bail out the depositors the way it just happened. The problem with that is it requires mergers. And this administration is deeply ideological opposed to mergers and concentration. And there are times when that's okay, but, there should be, no atheists in a foxhole and no sticking to a silly principle like that when the banking system is seriously at risk. And there were bids to buy Silicon Valley Bank over the weekend. Senator Haggerty confirmed that today. I've personally heard through the pipeline of like 3, and they all fell apart. Government wouldn't let it happen because they didn't like the bids or they didn't like the buyer. And as a result, there was no private sector solution that could have been had another bank been able to buy them, because the government wouldn't let them because of because of the ideological wing of the administration that's just opposed to bank concentration. I think that would have been a far superior outcome in terms of not having moral hazard, while still making sure the depositors got sort of 100 cents of the dollar, or as close to it as possible.
What do you think about Wang, Moran, and Murray's claims regarding the sums spent over the years supporting the banking system? Should the government still be in charge of averting disaster? Please share your opinions in the space provided below. Please make sure you thumbs up this video as well, as it will aid the channel's growth and the YouTube algorithm. Make sure to subscribe and enable post alerts if you want to see more videos like this. Thank you for your time.